Alright, so from a daily chart, we can see yesterday's open high low close profile here, okay, of Monday, first trading day of the week. Yes, it's a doji, but in my opinion, this is not a consolidation phase. Well, maybe it is from a higher time frame perspective, but I know on a lower time frame perspective, this was not a daily consolidation profile. We'll look at this profile when we go on the lower time frames. I'm looking at this chart, and overall, this is not that much damage being done to this trend, right? The market on the daily, yes, is somewhat trading lower at these levels, but right, it's simply consolidating. It's not creating strong bearish fair value gaps through opposite bullish levels, right? In fact, at the moment, it's still holding the fair value gap, is still holding the order block. So I honestly still want to be bullish. I mean, again, I said that if this week was going to be really bullish, it doesn't even need to come back to trade towards the weekly fair value gap. This does not mean that it won't happen. Obviously, today's profile will determine a lot of that. But then we'll look at what's on the 4-hour chart at these levels, right? But again, so far, price is consolidating on the daily chart. Is still unable to inverse bullish levels, and so unless there's something very significant inside of this range tomorrow, say a divergence at previous day's high, it's hard for me to look for shorts, right? I still think that the drawn liquidity is higher and will be for a long time, until the daily starts to give me signs that this is not what's happening, right? I mean, if it's not even able to retrace inside of a weekly fair value gap, that is very bullish in my opinion. Okay, so in terms of discount arrays, there's obviously still the weekly fair value gap. This is more on a perspective for the weekly profile. If not for today's profile, Tuesday, there's obviously still the range of a daily fair value gap. There's the range of a bullish order block, and there's the range of a bullish rejection block, right? Yesterday's rejection block here. If prices will have an open low high close profile tomorrow, for all it matters, can simply trade in the rejection block and keep trading higher. In terms of premium arrays, there's the rejection block, the premium rejection block from yesterday. Okay, if today will be an open high low close profile, very likely, right, will hold the range of the wick and trade lower. Ideally, this comes with a divergence. Okay, Tuesday and Monday making a divergence. I would assume that if there actually is this type of scenario, right, the divergence at the previous day's high, it will be the S&P 500 that trades above it, since it's already trading near it. Nasdaq is still trading in the lower half of the rejection block. So that's something to definitely watch out for tomorrow. Okay, so premium arrays, rejection block, we have the range of up close candles here that got traded below. Right, in fact, yesterday's high coming right at 50% of this range of up close candles. This level will also remain valid in case price were to trade higher this week, right? Because then this would become a bullish breaker on the daily chart. Right, price trading to the highs, right, some kind of a double purge. So if it were to inverse, okay, this range of a bearish order block, then that is very bullish, first of all, in my opinion, but we'll also then use this level as an inversion, right? So as a breaker. I think that's covered for the daily. We can go on the 4-hour chart, and you can still see the sensitivity. Okay, this is an order block of importance that I was talking about coming inside Monday, right? This will likely still be relevant. That's what I was saying yesterday, right? For this week's profile, either for continuation or for inversion. Right, so this being a discount order block, and the other order block of interest inside of the range was from last week, right? The one located right at 50% of the previous week's range. And in fact, today has also shown sensitivity to this level, right? Pre-market making a high of day at the upper half of it, 10 a.m. making a high of profile, right? The high of its candle right at 50% of this 4-hour bearish order block. You can see also the sensitivity at the discount order block, right? Asia coming, trading to the highs, rejecting, eventually, right? On the lower time frames here, we have some kind of reversal happening. And you can see that this reversal is happening from the order block, right? 25% of the order block. So, you know, again, like I look at this chart and it's hard for me to be short, right? Now, if tomorrow were to give me a divergence at the previous high, then fine. I think that will be good enough technical narrative to assume that the market can retrace deeper inside of the range. But until that were to happen, honestly, like personally for me, there's good enough reasons to assume that this will be the low of week. Especially if it starts displacing the range here of bearish order blocks, right? These will become bullish breakers, especially this one, right? Will become a bullish breaker. And so still two relevant levels, okay? Bearish order block, premium order block, discount order block. If this range is inverse today, okay, very likely will be used as a bullish breaker, right? This one, they all align near the same level, so you know, having the quadrants of either or is good enough. If we look at a 3-day look back, we can see here yesterday's profile being a New York reversal profile. But look at the way that this bearish New York reversal profile closed, right? It closed with a bullish expansion after having traded inside of, right, a key level coming inside of the week and making a divergence below the previous week's low with the Dow Jones and a divergence with Asia lows, okay, with the S&P 500. Right, so again, to me, what is saving the bears here? What is saving the shorts? A divergence, right? If not, I believe that there's good enough narrative for price to make new all-time highs from these levels. Right, there was price expanded, retraced, and now can continue trading higher. If we look at the range of a 3-day look back, right, so what we can see here is the dealing range that we're trading inside of, which is the previous day's high and the previous day's low. Right, you can see the double purge at these levels, right, so this makes it a dealing range. And if we look, right, where did price trade the most amount of contracts inside of this range was inside of this bearish order block. So now the question obviously to try and answer is, was this an accumulation of shorts or was this simply a shakeout? Right, the shakeout that takes out early longs, right, price leaves some kind of a double, triple bottom at these levels, takes it out, and then starts to use the quadrants of this bearish order block as a bullish breaker. Right, that can be a possibility. If not, they can obviously simply use its quadrants, okay, to keep trading lower from. And again, even better if this comes with a divergence at the previous day's high. This would make, in my opinion, for a strong candidate for high of week. Okay, if a divergence were to happen, when that divergence happened with Tuesday and Monday, that's usually pretty significant for an expansion lower until at least, I would say, if not Wednesday, New York, Thursday. Okay, especially because this week we have the Nvidia earnings Wednesday after the close. Right, so that can be an event that, even in case of a bearish profile, right, can be enough to reverse the range back higher. Okay, so that's covered for the 3-day range. This order block in premium is important, again, not only for continuation, but also in means of inversion. And if we look at the previous day's profile, obviously we looked at this was a bearish New York reversal, but right, a profile that had a weak closure, right, and an expansion against the daily trend. This is somewhat similar to Tuesday, right? If you look at the low from last week, yes, it was an open high low close profile, being a classic sell day, but look at the way it closed, right? It had an expansion against the trend at the closure, and in fact then Wednesday uses that expansion to form the low of day and trade higher. So let's look at the previous day's range, right? And what we can see is that there's an order block located in discount with a fair value gap. And in fact, that's our dealing range low, right? Currently the dealing range, which I think we looked at on the 4 hour, the dealing range that we're currently in is the shakeout from this morning, the shakeout in the PM session. And so price at the moment is trading around a premium order block and a discount order block. So both of these levels will be very important for tomorrow. Again, both of them can be used for continuation or inversion. I don't think there's anything to add. We looked at daily order flow, we looked at the 4 hour levels, right? The premium order block, discount order block. Seeing the daily profile develop around these quadrants is very helpful to identify a good trade intraday. And same goes on the hourly, right? These are same idea, different levels, right? You have a discount order block, a premium order block, and you want to see how the daily profile shapes up around these levels. Again, in case of a bearish profile, my favorite scenario would be a divergence with the previous day's high with the S&P 500, right? And from these levels trade lower. If that doesn't happen, then I believe there's enough narrative for price to create a low of day and inverse this bearish order block to turn it into a premium breaker, right? To then target all-time highs. I mean, you can see that there is a consolidation phase at all-time highs, right? So over here we're talking about a market maker sell model. The original consolidation comes back to the original consolidation, today being the stage of reaccumulation, right? So now the question that I'm trying to answer is this good enough for a reversal, or will price need to see a second stage of reaccumulation to distribute lower and target higher time frame discount levels, okay, such as, right, the weekly fair value gap. Okay, so aside from the higher time frame perspective, keep these two order blocks on your chart. They should be very relevant throughout the whole day. Try to identify 4 hour profiles around these quadrants. Again, say the low of day is already in and New York will trade at these levels. See if London or pre-market left any fair value gaps in this range, right? And if they did and New York chases into that, that can provide a very good trading opportunity to trade back to all-time highs. Vice versa for this, what is currently a bullish order block, right? If you come inside the session in New York and overnight rejected at the bearish order block, right? And New York is opening at these levels, say, and has created fair value gaps through the quadrants of either the bearish order block or the bullish order block, and revisits those levels, it can provide a good trading opportunity to target discount. Okay.